Hey, Jeff Scott here. This is my weekend review for 11/20/2016. Been a while, been about a month. I've been very busy with work, meetings, and the end of the selling season in my industry. Hopefully, as my schedule abates some, I'll have time to keep up with this and return to a more frequent schedule. I entitled today General Struggle as the Russell leads, and really when I think of general, I'm thinking of the large cap NASDAQ, such as Google, Netflix, Apple, Amazon, Priceline, etc. This is for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. Keep that in mind. I am not affiliated with any software vendor or trading company. Tools demonstrate those that I use in my daily trading. I have paid for everything I demonstrate. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. I have a number of key influences on my style. I'm a blend of what I believe is CanSlim, worn by O'Neill, improved by Ian Woodward and Ron Brown, accelerated by Morales and Katcher, and then I intersect what I've learned from CanSlim, which is sort of balanced technicals and fundamental stocks, money management, and market timing, with the best of John Person, who does all of that and more, and has a very similar approach to a top-down style that I've been using for many years. Author, mentor, indicator creator, and what's really cool about John is he's a hoot, but what's really cool is that his stuff never changes. The same basic stuff that he's been doing for 20 years, and when you can do it for that long through multiple types of markets, it usually means it works. Van Tharp, position size and money management, and my buddy George Lee, whom I do some trading seminars with from time to time. I have a lot of programs. I don't know if I hit my desktop or not, but basically I need TradeStation and Thinkorswim. Genesis is a great charting platform, but it is a luxury, not a necessity. I use HGSI for my analysis, EdgeRater to supplement that, and then a number of other sites and smaller programs. Here's the website for HGSI. Don't be fooled by my email address. I am totally independent. I don't work for them. I get nothing if you purchase from them. However, what I do get is a continued support where, the more users, the longer anybody stays in business. And since this is the most important program in my toolbox, having a great company with lots of customers is the best thing I can do to maintain that it's going to be here for my use. It's been around a long time, and it's clearly not going anywhere. Stock patterns are cyclical. Sometimes we go up and down very quickly. If you don't believe these are cyclical, go take a look at dry ships this week. Maybe we'll take a look at it later. The shippers did a round trip in a matter of a couple days. Crazy. Very crazy. Crazy and hilarious, actually, unless you were on the wrong side of the trades. All stocks, all indexes, all time frames go through this pattern. You've got to know where we are. It certainly felt November 4th that we were here, and I should have done a video then, but I'll show you what the boxes did off the bottom. If you don't know what boxes, you will in a few minutes. And you should have made some money over the last couple of weeks if you're long. And, when I look at where we are in the market, where I think we are, it adjusts what I do, the size of my positions. And I went big on November 4th, which was a little crazy before the election. But it's interesting. I live in an upper middle class neighborhood, maybe upper class, whatever you want to call it. Went to the library, predominantly white, on Sunday before the election, and there was a 3.5-hour wait. One of the line monitors came to us because we were at the very back. It was about 3 o'clock in the afternoon, and said, just go over to Riviera Beach, which is sort of I won't say dangerous slums, but it's definitely a lower class neighborhood, predominantly black, and told us that there was a much shorter line. Well, instead of spending 3.5 hours in a probably heavily Trump influenced line, we went to the inner city line, and we were in and out in 10 minutes. And I think that was a sign to me that Hillary was in trouble. And frankly, that plus what I saw in the market, I saw an opportunity to go long, and I did. And I did with Trump-related stocks, LABU from biotech, steel, coal, a number of things which moved, and I went big and got rewarded. Of course, On Tuesday, about 2 in the morning, I'm watching the Dow down 700 points, and I wasn't as feeling as rewarded as I would like to have been. If we look at where we ended up on Friday, banks have been strong, especially the regionals. You can see some green in here on a down day. Rising interest rates are good for banks. You can see that biotech here, mostly red, but it did have a last couple of weeks have been pretty strong. It was a down day Friday. Some REITs showed strength. Casinos, especially MGM, which has been on fire. IGT showed a lot of strength. And transports remain strong, whether it's trucks, trains, or planes. If we look at the major markets, you could see going back, and this is probably around this has got to be election day, where you can see the futures had a deep dive before the market even opened, and ended up closing at the high end of the range and have been off ever since. If you just look at them, this is the E-minis, the NASDAQ, the Dows, and the Russells. It's pretty simple to see that the Dow and the Russell are leading big time. They both slowed down this week, as I mentioned already, but what a huge move. The NASDAQ, certainly the laggard, hasn't taken out prior highs, while the Dow and the Russell are at all-time highs, and the S&P looks like it's pretty much right under their highs. The VIX spiked after hours pre-market, and the VIX has come back down, and the dollar's been on a tear ever since Trump is going to make America great again, I guess. I'm joking, kind of. Not political, not going to be political on this. On the weeklies, you could tell how the Russell is just a giant move up here, shot straight up. Kind of feels like a blow-off in some of these smaller stocks. And we have a weekly PPS buy on the E-minis, the Dow, and the Russell, not yet on the NASDAQ. When I look at in Genesis, and Genesis brings a couple of other things in. First of all, I've got stacks of E-minis, Russell futures, NASDAQ futures, NYSE, not futures, real cash markets, and Dow. You'll notice that I have OBV, and I've got AD lines on these. And I also have an orange seasonality. So take a look, for example, on seasonality. This is when the market starts to go up. Here's seasonality on the Russell, for example. And so we have strong seasonality. Look at this move, unfreaking believable. This move that we've had in the Russell on the daily charts. Somewhere in here is a PPS buy signal. Don't know. It must be buried in under those lines there. But everything looks turned up, and except for the NASDAQ, where we still have a monthly sell signal, although we just had a weekly buy signal come in on Genesis. Rates, big move. Look at this move off the bottom on the 30-year, and look at the 10-year spiking up. This is great for REITs. Actually, it's great for banks, regionals, especially, and then insurers. Regional banks have been on fire. Hope you own some of them. I've been talking about KRE for a while. Should be bad for REITs, MLPs, utilities, dividend payers, and home builders. To be honest, if you look at the overall rates, frankly, they're still kind of low. And I think because of this, home builders still have some strength. Maybe people will try to be in closing now on houses before rates go up, building new houses. And there were surprising strengths in certain REITs and MLPs. No question, utilities are down. AD lines, both the yellow, by the way, is the S&P. White represents whatever we're looking at, and both the mid-cap 2000s and high-cap 1000s, Russell 2000, Russell 1000, AD lines and price are at new highs, no divergence there. If you look at breadth, stocks above the 200-day moving back up, as well as stocks above the 40, not at an extreme. You make money at extremes, I like to go really long at an extreme and then wait to the next extreme and let my stops take me out until I get to that next extreme, or lower positions if I think the market's going to roll over. Here's my favorite extreme thing besides the buckets. This is the 3-month new high, new low. Down here from about 10%, 8% and below is a very reproducible bottoming signal. And when I get up near the top, I reverse here. So you can see we're getting close to the top. So We may run a little bit longer, but we are getting to a point where we're getting closer to a risk of a reversal to the downside. The McClellan, again, at extremes, when we're minus 4,000 on the summation index on the daily, you get to a point where you expect a reversal. You notice you had a lower low here and a higher low here, so you had some divergence up here. That was a good sign for the recovery that occurred earlier this year. We're about to make a new high in the S&P. We're not making a new high on the daily. That might suggest some concern. If I look at the weekly, the same thing, where frankly we're still negative on the summation index, even though weekly on the S&P we're pushing towards new high territory. This is one of my fun things I learned from Ian. Buckets, you notice I've done this in EdgeRater. When it says 1113, I updated my files, so the S&P 1500 were updated as of 1113. And this is what's so cool. I can see here on 11/2, which was I think a Wednesday, was when the market gave sign of a bottom. We had over 20% of the stocks in the S&P 1500 below their lower Bollinger Band. You spend 5% of your time there during the year, and when 1 out of 5 stocks is below, it either means the market's in a big crash or we're going to bounce. Typically, we bounce. Here's where it was 12 days later, probably 8 trading days later, I believe, on 11/14, or 10 trading days later. Have to do the math. But you could see we had a reversal with over 40% of the stocks above the Bollinger Band. Now, when this happens in a bull market, we have a slow pullback or a flattening. In a bull market, this triggers a bounce. And if you look at where we are in the 18th, we've eased off. We still have 80% of the stocks above the midline of the Bollinger Bands, but the number of stocks above or at the very top of the bands has eased off. So the current buckets, again, are not at an extreme. We did ease off some, not a big signal. HINDYs, one is looking for a potential Hindenburg omen to signal to us that we're at a market that's about to have a big bear market or big correction. And I've talked about them in the past. You can look up the Hindenburg omen, and you could see that down here, the signal line has been empty here for months on both the NYSE, which is the classically used index, and I also use the Russell 2000 or 3000 as a alternative to review. I call it a bull zone. We had a big kahunas hit the market. Here's the 4th, which I said was the bottom where my arrowhead is. And on the Monday open, you could see we had kahunas across the board, and we shift out of this mostly red market to a market that you can see is mostly green, with the laggards being the Russell 2000. Excuse me, not the Russell. The Russell's leading. The laggard being the utilities. And if I look at sectors, again, we're looking at the 3rd series here, the percent B times bandwidth, the Woody indicator for buy-sell in the market. And you can see we're mostly green on the sectors. Staples, utilities, and energy are lagging. Canaries in the coal mine, these are the FANG stocks. You notice I showed you the major markets, and the Russell and the Dow especially breaking out to new highs, the S&P getting close, the NASDAQ lagging. I think this is why the NASDAQs are lagging. Looks pretty ominous here. Still below the 50 and 17-day moving average, and the 8-day all red here. I don't think we're going to see this market go on for long unless these Canaries turn around. It's hard for me to believe that with the generals failing, that the privates are going to win a war. So something to watch. Now, from time to time, I talk about Ian's boxes. Now, the most important concept is that although I am a high growth stock investor, and in most years, stocks with great earnings per share rank and growth are the stocks that lead, that isn't the case this year. Historically, those high ERG stocks, which is EPS, relative strength, and group rank, outperform, but we've been in the market of junk off the bottom. Now, Ian boxes look at high growth stocks, and they only are effective, or the highest likelihood of effectiveness would be in the scenarios of a market reversal off the bottom. boxes are constructed by looking at current earnings percent growth rate, looking at 100, 50, 125 to 50, and this is looking at the last 2 quarters. And then looking at the last 5 years of average annual earnings. And box 1 would be stocks that are growing over 50% a year with 100% growth the last 2 quarters. You'd expect those stocks to double in a year. Stocks that are 25 to 50 annual growth and growing 50 to 100%, you expect to double in 2 years. Those are box 5. Some of my favorite ones that seem to be big movers when the market comes off the bottom are box 7. And box 7 stocks are stocks that are turnarounds where they don't have great annual earnings every year for the past 5 because they stubbed their toes, but they do have current earnings growth that's pretty outstanding. Now I could show you back 30 years of box stocks. Here's one that I remember back in 2011. And if you took a market bottom on September 1st, 2010, and you looked at the stocks that we found in HGSI that were box stocks, and then you looked at the various boxes and got a return, you would see at the market peak on April 29th, so that's 3, 7, about 8 months, that the S&P was up 24%. God, don't we love those days, huh? Wow. How would you like, however, to have bought box 1 stocks and be up 125%, box 7 stocks up 106%. And this is only looking at stocks with ERG greater than 255. And you could see here, here's the S&P, a robust move of 24%. And it is a robust move. But that said, this is a lot more robust up here. In fact, every box outplayed the S&P. So I felt that the weekend of the 4th, we were about to see a market low. And therefore, I ran my box report, and these are some of the stocks that I bought on Monday before the election. Now, I actually thought that Trump winning, I'm not going to say it was good for the country or good for my family or anything like that. Still don't know, to be honest, although my kids have their opinion. But I was very concerned about Hillary's capital gains taxing and the multiple years to vest, increasing the rates, and that I thought you would see a very big sell-off into the year end as folks took their profits and wanted to save on the rising capital gains. But with Hillary's loss, and especially what I saw at the polls on that Sunday, I decided it was time to go long. So these are some of the stocks that I purchased. Now, if you look at this, these are stocks purchased after the 5th, so purchased at the open on Monday, and closed at the end of the day on, well, Friday. Since a closing day Saturday would be where the market ended on Friday, and closing day Saturday the next week where the market ended on that Friday. And what you can see is this is crazy. 2 weeks, 10 trading days. The S&P was up great, 2.36%. But had you bought NVIDIA, the box 7 stock, or box 5 stock, you'd be up 31%. If you said, I'm not touching NVIDIA, it had earnings coming out, and just bought the box 7 stocks, there were 1, 2, 3, 4, 5, 6, 7, and they were up 18%. Box 10 was up 17%. The worst performer were box 1 and 2, which were up 3.68 and 8.73. Not too shabby. So before I answer the question on the bottom, let me show you a trick. Go into HGSI, go into, why don't we go into all securities. And now I want to do a view here. I'm going to do all stocks. And then I'm going to put a filter on. So I created a filter. Let me see which filter I want to use. Hope it's in here. Okay, here's ERG 240 for boxes. I put in a price, a volume, and an ERG rank. So what I want to do is I want to make that, I'm going to duplicate that. I'm going to open it up. I'm going to make this ERG 250 for boxes, 255. And I'm going to change this value here to 255. So it's only taken those great stocks with high ERG. And now I'm going to hit that, and you can see there's 58 stocks that make the boxes today. I'm going to go in this little thing here called the Spectrum Analyzer, and then I'm going to go and I'm going to find load custom slices and look for the boxes, HGS boxes, and it automatically puts the stocks in the boxes. And so I could see I have 2 in box 1. I've got 2 in box 2. I got 6 in box 2, and they're listed down there. I've got 3 in box 3. I've got 2 in box 5, and so on and so forth. And then I could click on this plus, and should have a directory called HGS boxes. And I want to make a new group, and I'll call that HGS boxes. And today is 11/20, say. And this is ERG 255. And I'm going to hit OK. And now I'm going to go back into HGSI and show you that I now created under boxes a new directory, 11/20 ERG 255. And I actually have the stocks that you can come down and look for of stocks that are box stocks. Now, I love box stocks. People know that I love box stocks. George was giving me a hard time, Lee, because box stocks weren't working. The key with box stocks is they do work, but they only work at market reversals off of a bottom. August 24th last year was a bottom reversal. If you look at this year, November 4th was a reversal. We've been in a bull market for years. You don't get great reversals off a bottom in a big bull market. Now, high growth stocks have led since November 4th. Has the market tone changed? Here's the market that we've been in this year, and you notice that ERG has been a loser. Earnings per share ranked has been a loser. This is performance, and this is rank. Typically, it's the opposite way. Relative strength has been a loser, and stocks accumulating usually do better than distributing, but that's not the case. This has been a junk off the bottom rally. Here we are now, flattening of this, flattening of the earnings per share, starting to see some movement up on relative strength, but still accumulating stocks are poor. So until we see a change, it's still a junk off the bottom. But go take a look at some of the earnings per share growth on some of those steel stocks, ore stocks, etc., and you'll see that some of that junk had some pretty nice fundamentals, or earnings per share growth, at least in relative strength. Know your news and EPS dates. Slight week because of the holiday, but you are going to get some claims early in the week on the 23rd, some durable goods, home sales, sentiment, crude and natural gas inventories. And then on the 23rd, right before you get ready for Thanksgiving on the 24th, you're going to get the FOMC minutes. I think everybody and their mother are baking in a rate increase. Wouldn't it be interesting if they went 50 basis points? Well, I don't know if the market would respond good. I think at 25 basis points we're probably okay. As you can see here, a light but not insignificant earnings week. You've got some solar stocks. You've got some retail. As I say here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. Blow off in the Russell while FANG lags. Transport to new high confirmed by the Dow. I'm not sure which is supposed to go first for Dow theory, but they're both setting off new highs. Big move off the November 4th low led by box 7 turnarounds. Rates move up, which is good for banks and insurers, bad for utilities, and it also looks like it's bad for emerging markets. Surprising Trump win on election night removes overhang of aggressive end-of-year tax selling related to Hillary taxation initiatives. Trump stocks slowed down a bit this week after a huge move. Infrastructure, military defense, security, and steel. And the shipping insanity Take a look at dry ships. Might be a sign of a bubble. Tonight, the usual agenda, top-down approach, and then a little bit of my bottoms up. And I'm suspending chart of the week until next year, since I'm not certain I'll be doing this weekly. Until my schedule comes down, I don't like telling you what to buy if I don't talk about how I manage them. If you're interested in a computer, I have a number of lightly used trading computers available. I buy them. Those that know me, I play with them, and then they sit in a box until I sell them. So all these are in great shape. I don't think I have the boxes on the surfaces. I'd have to look. If I don't, I discount an additional $100. Everything works great. I also put on a copy of all my summits, and then I used to sell an indicator package for TradeStation for $750. I include that for free. And basically, if the stock's less than a year old, I charge you about 55% of what I paid, and every 6 months or so, I drop that down additionally. These are all about a year old. MSI Dominator Pro, which is a big computer, 1080p resolution, 2 terabytes of SSD, of which 1.8 is actually usable. The Dell XPS 15 and 13, they're both the same, 16 gigabytes, a terabyte SSD in 4K. The Surface Book, 512 gigabyte SSD. Everything I buy is an i7. Same thing with the Surface Pro. So if you have interest, just email me at hgsidoc@gmail.com. I could also just reformat to brand new and not put my material on. That is your call. Let's go on to the charts and see what the market is telling us. In fact, let's go look at TradeStation first. So let's take a look at some of the indexes and show you how strong they've been. Okay, I'm able to access cash data, so let's just do this and change the time frame. See if I can fix that. Yep. So let's start with the E-minis. Markets are not open. Futures are not open at this hour. So not really much to show you except what happened last week. All right, that's not working. Try this one. Oh, because they're blue, Jeffrey. Sorry about that. Colorblind sometimes. All right, they must be blue on the, all right. I'll get there yet. I'm a little slow. It's in the morning. All right. Here we go. So we can look at the E-minis. Here's the big election night disaster. Here was a buy signal that came in. John's person buy signals came in on the 7th. So this is Tuesday. Monday. Here's the 4th, which was Friday. So this is Sunday night trading, Monday, election Tuesday. Or have I got that wrong? This might actually count as, this is Wednesday, so Tuesday night and Wednesday, Monday night and Tuesday, and then this would be Monday. All right, I'll get this straight. Election day Tuesday here, but the impact was on the market starting end of day Tuesday or Wednesday. All right, got all that set. So here's your basically your S&P high jump at 82%. Remember, I look at 5 things. I look at number 1, I look at arrows. Green is a person buy, red is a person sell. So we have a person buy. Number 2, I look at color of the bar. Green is okay to be going long. Red, I should be going short. Blue, I can go either way. The third thing I look at is within the envelope. Am I under or above? When I get big moves below the envelope, typically the market rebounds. The fourth thing I look at is the high jump. When I know I'm above 95% on the high jump, I'm going to rebound the wrong way. And then the last thing I look for are little dots that show me MACD divergence, which I don't see here. So I look at the E-minis. We've had a big up move, blue but on a buy, weekly on a buy, and green, and monthly on a buy. Hard to be short E-minis until they change their color, meaning change their their picture. They've already gone to blue. I don't mean that color. If I look at the NASDAQ, the laggards, still in a buy in green on the daily, a sell, but gone to green on the weekly, and a buy in blue on the monthly. So the NASDAQ looks like it's rolling around here. Sometimes the color, the elder impulse will change before I get a person buy signal. We'll see. 77%, no obvious divergences. If I look at the YMs, notice these red dots here. This is a MACD divergence and the market sold off. On the YMs, the Dow futures in a buy signal, but blue popped up above the envelope, went sideways to get back in. Green in a buy and does have a MACD divergence on the weekly buy and on the monthly long and green. So a little bit of concern here. Sideways will help that, but in a strong buy scenario. And then the leader, the Russell, wow, big move off, going sideways here. MACD divergence outside the indicator window, the envelope here on the weekly, in a buy on the monthly. So a little evidence that we're getting extended here. And look at the Russell, 100% on the high jump. Out of curiosity, the NASDAQ was 77 and the Dow was 92. So the Russell is clearly extended. Would not be wrong. Look how far above the envelope we're here. To see this to continue to go sideways or pull back to get back in the envelope. Russell been a leader. Russell overbought. Big time. All right. Down here we have the bongos. And notice the Russell daily, weekly, and monthly bongos are a buy. Just going backwards, the Dow, same. NASDAQ, still in a weekly bongo sell. And then the E-minis, all green. So the NASDAQ, the weakest. If I look at the sectors real quick, if I look at healthcare, notice healthcare had a sell signal come in on Friday. Financials are big uptrend. Not updating very fast here. I think my internet's not too fast today. Discretionary, big up move. Technology, not a big up move, but certainly in a buy signal. Industrials, big up move outside the envelope, going sideways with MACD divergence, sort of what the Dow looks like. Staples, laggards in a sell signal on daily, weekly, and monthly. Materials, big run up and sideways. Utilities should also be a laggard. Interesting on Thursday, utilities showing signs of a bullish convergence and a new buy signal on the dailies, but still firmly in sell signals on weekly and monthly. Energy going sideways. See if we can go back to those discretionary. See FAS showing you the financials above the envelope and with MACD divergence. So no question that the Russell is extended, as are financials and some of the other sectors. All right, now let's go take a look at the market. Let's go down to Woodward and Brown User Group Full, and let's go into Major Markets Plus, top-down view, which is balanced price and volume. And you could see that using this combo ranker, that the small mid caps are leading. Gold, volatility, bonds, silver, biotech. Some of the larger indexes are down here. Let's take a look at some specifics. Now, there were no kahunas at the end of last week, so I'm going to go into my index view here. And let me add my weekly bongo, my index bongos to this. The settings on bongo for stocks and for bingo rather, on stocks in the market are different. So let's put a market bingo on this. The market bingo is that oversold baby out with the bathwater, which you're not going to see anything here. If you go look back here, you can see where they were earlier this year. These are signs that the market is getting overdone, and then you look for eurekas down here, and you get back in the market. So here's the S&P, and you could see it was in a wedge that we talked about probably the last time I did this presentation. It sort of fooled us and broke below, but back here on election day, or not long after election day, this would be the 9th, the day after the election, it broke back into the wedge, and now we're trailing up the extension of the lower part as we move up to new highs. So if I look here, you can see we're right below new highs on the S&P. Nice up move. Obviously, we're concerned about getting extended. If I go down and look at the Dow Jones Industrials, looks similar, big move up, broke above prior highs, so all-time highs here, going sideways, bongos are green. If I look at the NASDAQ composite, not yet at all-time highs, or is it getting close? That's right, the NASDAQ composite looks good at all-time highs. If I look at the NASDAQ 100, you see something else where they're not at all-time highs. And the NQs, remember, are the NASDAQ 100. And lastly, the Russell 2000, which is where a lot of the strength has been, and you could see almost a blow-off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 in a row days up off the Russell. And notice how close it pulled back to the 200-day moving average and go back to the S&P. Did pull back to the 200. That's why I put these on the chart. Dollar also with a big move up. I guess at some point the dollar can hurt the market, but I guess if we're going to make America great again, we're going to have a strong dollar. Let's make this, let's go on a weekly. Get an idea where we might see some resistance on the dollar. There's all-time highs on the dollar. Okay. And then here is kind of we're right at what's been a resistant area in the past. So it might be interesting to see what happens. So we're kind of at a place of prior resistance. A breakout here, I guess, would be incredibly bullish. And as long as we've had this since 2007, now it just shows you how strong the dollar is right now. So dollar super, 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 super strong. That will ultimately be bad on certain things like metals, although copper will grow if the market economy is growing. Tightening or raising rates and tightening rates will be good for the dollar, and it will probably force other, my guess, federal markets outside the U.S. to have to look at raising rates to strengthen their dollars, or you're going to see a super, super, super strong dollar, which for us makes buying their goods really cheap, but it's going to make our companies that sell ex-US also have some challenges. If I look at the VIX, you can see the VIX spiked here on the 4th, which I said was probably the bottom of the market, and then 7th, 8th, and then it sold off post the election here on the Wednesday, the 9th of November, and it's kind of down to where it usually drops to. Now, this is kind of also where it takes off from, but it can stay down here for weeks at a time. You know, if the dollar is strong, what's not strong? Gold in the toilet broke through the 200-day moving average, which I looked at on multiple times. You don't want to be in gold right now. And if you look at silver, same story. If I want to look at industry groups, now I had a question from a canceling board about why I like HGSI for industry group and sector rotation. So I'm going to come and do a second recording for that site. But I like to go to 07, which are all the industry groups, or 172. I like to look at two-day force and get a sense of where the momentum is in this market. And then if I right-click on any of these, I can see some of the leading stocks. If I right-click on semiconductor devices, look at some of the strength in the market, and I'm going to go into the stock view down here. So for those that are new, weekly bongo on top, daily bongo on the bottom, accumulation distribution, and then the forces. This is the high jump bar. This is a red candle high. When you pull back and you Start to move up, you may get a green candle low. This is a Bible gap up. This is a squeeze. This is a MOBO. This is the industry group in gray. PSA dots in green and red. 8-day exponential, and then green 17, blue 50, and red 200-day simple. Down here we have on-balance volume with a moving average. Green are eurekas. Red or maroons are phoenixes. The greens are good, and those are signs of a big move in the market, or a confirmation of the market is moving in the direction is going up. Red means the market's moving down, and down here our window is kahunas. So these green and reds up in the volume window, these are calculated on the market as a whole. The kahunas are calculated on the stock. Notice here we've got, the last time we had a Hindenburg fire, I don't even show them because they're so small, was back here in June. And I'm looking for a series of Hindenburgs to give me a clue that the market is in trouble. So I look at AMD, I see a stock that sort of had a cup, not much of a handle, and a breakout. Everything's green, coming out of a squeeze with a viable gap up, recent kahuna. Doesn't make money, big revenue. Like the picture a lot, cheap stock. It's one that made it to my watch list. NVIDIA, breakout here, the Bible gap up. This was the time to buy it. It's kind of extended. Looks like it's going to hit 100. I don't know if I'd be buying with the high jump that's nailed against the top, but what a nice extended stock. Marvell Tech Group must have had earnings come out on Friday with the Bible gap up out of a squeeze. If I go more info from Web, let's go to FinViz. Strong earnings. So you can see what the news was. Bible gap up, great earnings per share growth. This might make it to my watch list too. Micron Technology, also breaking out here. Certainly new highs for now, but it was an expensive stock in the past. You can see it's not at its all-time highs or anywhere close. So this is another one that I might want to look at further. Throw it in here. Qualcomm, waiting for a signal. A kahuna, a PSAR reversal. This would get me excited too. I like buying stocks in uptrends, and it's started here at 44 and sitting at 66. Stocks in a long-term uptrend pull back to support, just give me a signal. That's another one. So semiconductor stocks look great. Close that, right click, back. Exploration and production. Some of these looked okay. These have been up and down. Sideways on ConocoPhillips. Look at the growth coming in here. Pays a 2.2% earnings. Continental Resources, also a sideways stock. Encana, a natural gas play. Whiting Petroleum. These might be some you buy and put away. But even some of the ones that I've been playing, like Devon Energy, they're just not doing anything right now. Now, if OPEC comes up with an oil deal, these things will soar, and there must be some underlying strength because it was one of the top groups. Big winner are banks. Hard for me to tell you which one to buy. They all look the same. Look at this huge move. Gee, that was the day after the election. What a shocker. They must like America being made great again. PNC Bank, BB&T, H-Bank, U.S. Bancorp, Regions. They all look great. Hard to find one that's at a good buy point. You also can look at ETF, which is KRE, which is the one that I bought in preparation. And notice that we had right here, you had a eureka in the market, tell you that the market was turning around, and you had a kahuna, and the stock was not very extended. You had the opportunity of buying there, buying the next day, and it just took off from there. So regional banks look strong. Application software. Salesforce had great earnings, gapped up, and then pulled back, but still a nice move. You might want to consider buying this. Pocket pivots, kahunas, everything's green. Mobile breakout from a squeeze. I wouldn't let it get much below the bottom of that day. Nuance Communications, also a Bible gap up. Don't like where it closed. Cvent, we use them for my business. Don't know much more about them. They must have, I don't know if they're getting bought, but they traded within 2 cents. I got a feeling they're being bought. So let's see what happens here. Sale of Cvent to Vista Equity. All right. That explains that one. Into it. Pull back in the 200, breaking out. Twilio. There's one of your, comes up and it comes down in a single stock and trying to go up again. Had a big day on Friday. All right. Did you notice that outside of semis, we're not finding great looking stocks? It's interesting, isn't it? A lot of junk off the bottom. Apple needs to get above 110 and stay there, frankly. Notice OBV is trending down. Bongos are down. Hard to get excited about Apple. Here's a strong stock. Great earnings per share growth. CommScope Holdings. Kind of extended. That's the only problem. I don't usually look at stocks that are underperforming the index, but I'm going to here because there's a couple of stocks to talk about. Here's another stock that did a round trip. Acacia has great earnings. They raised earnings and still sold off. An IPO that ran from 28 up to 124, 130. Craziness. I like to see it base a while before I get back into it. Weekly bongos red, I would pass. Finisar breaking out here. Everything's green. Great earnings per share growth. Put this on my buy watch. Juniper Networks, kind of loose, but other than that, I like the stock a lot. And then Gigamon, talk about a nice lower left, upper right. So communications equipment also has some pretty attractive looking stocks. Internet media, Pandora, trying to retake the 200. It's a pretty big downtrend. Yelp, uptrend, pull back to support. Just give me some momentum in a green weekly bongo. Twitter, struggling at the 50 daily. I'm not a Twitterite. Yandex, I don't like these. They must have done well the last couple days to get there and have big volume. I'll pass. REITs, interesting to see these up here with REITs going up. Remember, within REITs, there's a whole bunch of different REITs, and they do different things. This is a timber and manufacturing sale, forest products, real estate, and construction. So mostly green here, broke above the 50 on a pocket pivot and a kahuna, pays a 4% dividend. Weyerhaeuser gets to my buy watch. Prologis, they do, so one of my companies used to lease from them. Industrial properties. Bongo's red. Sitting here at an interesting buy point, but not enough momentum. I don't like the story about American Homes for Rent, but I do like the stock. Uptrend, pullback. Broke above the 50, mobile breakout from a squeeze, pocket pivot, and kahuna. Weekly bongo will probably change soon. It's got to get above the 50 weekly to change. Well, you're there. So here's one that you might see something happen soon. That one fell hard. Here's a chart. Pays a 5.9% dividend, great earnings per share growth. PSAR breakout of a squeeze. Everything is green. Outfront media. Oil and gas services. I have some Halliburton that I'm currently in, and nice uptrend. Like the exploration stocks, not that exciting. There are a lot more rigs up, which I guess is good for the servicers. Mobile breakout from a squeeze. Rowan, rig. Are they that exciting? Not to me. I'll stick with Halliburton. MLPs, despite rising rates, moved up nicely, and I'm not sure if it's stabilization in the industry, not concerned about bankruptcies. Here's ETE, pays a 6.6% dividend, breaking above the 50. You need to know the dividend dates on some of these. ETP, 10.7% dividend. Kinder Morgan, 2.3. Here's E-Link, pays a 5.7. Haven't done much in months, but if you're collecting a 5.7% dividend on a stock that's going sideways, you probably are outperforming the market. And then what else is? And then lastly, medical devices. And these are stocks that benefited from from Trump, because there's an Obama tax on medical devices. I think it's expired, but this means it's not coming back. Stryker, not that exciting. Nuvasis, uptrend pullback. It's sitting on the 50 with a pocket pivot. Something to watch, not yet. All right, those are the stocks to the upside. Groups to the downside. Specialty apparel, look at the gap. It's interesting as we're going into the Christmas selling season, what a big sell-off. What kind of information drove that? So I'm constantly going to the web with FinViz, and it's telling me weaker sales and dour guidance. Okay. That may be bad for the whole industry group. And base metals. Now tech, hard to believe it had that bad of a down day, because look at its chart. Remember this puppy? I gave it to you about $3. You know, you're tired of me saying that. But there's not many that I give you that goes up 6 to 8 times and keeps going. It's up 489% since the beginning of the year. It's certainly my big winner of the year. And I don't have a big enough position now. I wish it was 10 times the size, but it's still pretty robust. Pull back a little bit in a major uptrend. I wish all my stocks looked like that. But you know what? 8 million shares traded, down 2.3%. And oh, by the way, one thing that I like to do is when a stock gets a little bit ahead of itself, is I buy some puts. And puts on this thing were so cheap. So I got $23 puts, and I got 2 weeks of time in it. So rather than take profits before the end of this year, I'm just going to protect myself with puts, and then get the longer-term capital gains tax. Alcoa had a nice run and gave back some on Friday. Kind of big move on Alcoa. Generic pharma. Interestingly, the big banks were down on Friday. The one that I have, Bank America, didn't make the picture. Big run up. This is what I meant by some of the Trump stocks looked like they were stalling. So if I put in Bank of America, same picture going sideways. It's got great earnings per share growth, maybe an opportunity to raise their dividends. Big position in this for me. All right, so now I've done my top-down approach. I looked at the markets. Let's look at some of the things that I do from a bottoms up. From a bottoms up, here's a couple of my favorite things. I'm going to go into all securities, and I'm going to look at a couple of my favorite scans. One of them is from David Ghilardi, and it's the Sprinters. And these are some of the stocks that come up on the Sprinter scan, and these are strong technical and fundamental stocks. And this is not a bad place to look. Notice how many bank stocks. You got steel, insurance, banks, investment banks, semis, wealth management, education, banks, airlines, banks, steel, education, semis, banks, education, insurance, semis, banks, semis. You noticing a trend there? I am. These stocks, banks, have done very well with the rising rates. Steel stocks go up well with Trump, who's going to potentially address some of the bad practices by China. And these give you a list of stocks that have accumulation, great ERG, and these are the ones that come to the top. I look at the HGS 100, which is kind of like the IBD 100, except we can update it, or IBD 50 now every day. and get a sense of what stocks are leading. Again, a lot of things that benefited from Trump. I like to look at these are from the warehouse view, but I could also let me go into a generic view here, into the smart groups and see the groups that some of the work that was done for me. I might look at, for example, stocks with big volume, which is one of mine. So these are stocks that had 3 times volume and uptrend. So I might want to look at those. Some of them we looked at before, Marvell, Nuance Recording. Let's look at some of the shippers. All right. Now remember, not all shippers are the same. Some ship oil, some ship containers, and some ship dry bulk shipping. So let's look at one of the dry bulkers. So let's look at dry ships. Why isn't this showing up? All right, let me open up a chart and see where it is. It may be so low, it's taken off my chart. Let's see. It had a big split, and then for reasons that I'll never understand, this is what happens when you have a stock. All right, let's look at this. After split, on November 1st, it closed at $4.35, trading 91,000 shares. On the 10th, it opened at $4.80 and closed at $15.60 on 5.6 million shares. On the 15th, it ran as high as $102, closed at 73 on 10 million shares, and then it came back to earth on Friday, closing at 11 on 8.5 million shares. You have to be nuts to trade this type of stock. Nuts, 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 nuts. It is great getting in, but you have to be sitting at your computer with small time frames and being very careful. Here's Diana Shipping. Same pattern. Market ran, here's 11.7 Monday, closed at 250 on 122,000 shares. Here's 11.16, 7 days later, high of 497 on 5.7. So it ran from 249 to $5. So you have a double occurring in 7 days. Now the funny thing is DCIX is container shipping, different shipping. And watch what happened here. It got taken up on the hullaba, and then I love this one. So here you're going back on, take this date, on the 9th, it closed at $2.21 on 79,000 shares. Then it got caught in this hullabaloo, and it went from 2-something all the way up to 26.17 on 19 million shares, and closed at $4. So if you just gone to sleep and woke up 2 weeks later, you think you doubled your money. Boy, does this remind me of Plug. I mean, we could give you the list, and I've said it many a time. When you see that happen in a stock, all right, let's tighten this puppy up, and I'll show what I'm talking about. This pattern never ends well. Stocks don't go from $1 to $11 in 3 months based upon reality. So when you see this pattern and you see this sell-off, you got to get out. And you should get out midway through that bar. These are tough to trades. God bless you. Other things that I like to do is within the smart groups, let me just tighten this up. I look at 3 times volume. I like my pullback to the 50 with a kahuna. So these are stocks that are in uptrends that have pulled back to the 50-day moving average and had some momentum. There's your Weyerhaeuser. None of these really got me that excited. Here was one of those midstream MLPs with a big dividend. So uptrend, sideways at the 50, pocket pivot, kahuna, out of a squeeze, no growth, but pays an 8.9% dividend. That was one that I liked. American Homes for Rent, is one that has the pattern uptrend, pullback at the 50, and a kahuna as well. Look at the earnings per share growth. I should get my head out of my butt and say I like this because of the pattern. I just don't like the concept. I like to look at squeezing with a PSI reversal to the upside imminent. So here's one I know I like, Blackstone Mortgage Trust in the financial. So here's a stock in an uptrend, gone sideways, therefore it's squeezing. You notice it had a kahuna on Friday. It's about to have a PSI reversal, and it's got a weekly bongo as green. It pays an 8.3% dividend. And what I might do on this stock is, let me open this up. This could have been a stock of the week, although it's too thinly traded, I suspect. Yeah, 800,000 shares. I know that on Friday, the PSAR dot was at $30, pretty much even. So I might put in an order at $30.10. I might put my stop right below the 50, so at $29.25. So I'm risking 85 cents, which is a little bit less than, a little bit more than 3%, or about 3%. And if the stock trades below the 50, it broke the reason why I did the trade. Here's the group strength. And if it doesn't trade up on Monday, I won't get filled. So I like these stocks for several reasons. They have not yet broken out. They're in a squeeze. I have a clearly defined buy point as it gets close to the PSAR dot. And just look at what happens. It gets close, it breaks out, it runs for a couple days. It gets close, it breaks out, it runs. Close, it breaks out, it runs for a couple days. Just looking for a potential stock to break out. And then with an Ian Stutwork, may rest in peace, I'll look at things like the best of Woodward and Brown. Another one of the stocks that, this was one of the, in my list, going back on the 4th, and here was a stock sitting on the, here was one of my Monday buys when it took out the 50, went sideways for a couple days and then broke out. This was bought because it was one of the turnaround stocks off the bottom. So those are some of the things that I do in HGSI for bottoms up. And lastly, when I go into TradeStation, a couple of my favorite things, this is how I use John's work. Buy two. By definition, these are stocks in an uptrend, pulling back to support. And here's one that we liked, that BlackRock Mortgage. So here's a stock clearly in an uptrend on monthly, sideways pullback, and then recovering on the weekly, although it's in a buy signal, with a new buy signal on the monthly, volume about to break above its moving average, coming out of a squeeze. Here's OBV here, breaking out on both weekly and daily. This is a different volume indicator that hasn't yet triggered. So I will use John's scans to find great stocks. If I want high close dojis, there were a bunch of high close dojis this week. Applied Materials was one that was interesting. Here's a new weekly buy signal and a high close doji. Volume looks great on all 4 of the volume indicators. Breaking out of a squeeze. It's already run a little bit, which was my only concern. Yeah, stocks run too much. If I'm in a shorting mood, I might look at stocks in a daily sell near pivot resistance when the weekly is in a sell. So Amgen has been selling off, and you could see it pull back up into resistance. OBV here on the daily hasn't rolled over. It certainly rolled over the weekly. I'm looking for stocks to short in here to see if anything else was one that I looked at later. Under Armour looks horrible. New shorting opportunity, volume breaking down. It's just, it's a $30. A more expensive stock that's maybe shortable is Sherwin-Williams. And yes, it's come down a lot, but I like to buy stocks that dropped, that pull back up into resistance, and whose OBV has been rolling over on the longer term. Sherwin-Williams looks like a short with a new PPS sell signal. And I can look at low close dojis, again, looking for potential shorting candidates. ARR is a cheap stock. Low close doji, volume breaking down, another potential shortable stock. So, looked at a number of things of how I do things. Let me just go back into HGSI and look at the ones that were some of my favorite buy stocks for the weekend. So my buy list, there's 58 stocks that looked interesting to me. Let's rank them by combo. Many of these we've looked at already. I mentioned international gaming, I think, in the beginning. Talk about high, tight, lower left, upper right. Earnings are not out yet, so I wouldn't buy it until earnings came out. Here's that Blackstone Mortgage Trust that I showed you a couple of times that I found interesting. Uptrend, sideways, about to have a PSAR reversal, low risk buy with an 8.3% dividend. FedEx looked interesting. Already perhaps run too much. And then speaking of run too much, one of my favorite recent buys in the last several months was Carbonite. And you can see Carbonite's another nice tight move up. A double since it broke out here. And let's just take a look at some of the things that I like to do. A stock in an uptrend from 7 up to 12 or 11. Sideways move back to the 50. And then a breakout with a PSAR reversal on this day here. After showing up with Eureka, a Kahuna, a Mobo breakout from a squeeze, and everything is green. That's when I got in. I was already concerned that the stock had run from, say, somewhere here where the low is 724 until when I got in, which would have been this day here, where the high was 1004, so I ran 20-30%, and it's doubled since that point. All right. Lastly, the stocks that made it through my John screening technique. These will be mostly stocks that have pulled back and whose volume is leading to the upside. Let's just very quickly look at some that I liked, and then I'll show you a couple of the shorts that I didn't like. AMBR, Amber Road. You could see it's been in a big uptrend. You had a little bit of a pullback, a PPS weekly signal in a week ago. In a daily buy, volume is incredibly strong. That's what got my attention. The time to buy it was on Wednesday, but it still looks interesting to me. Carol's is a restaurant group. Crazy day here. Don't know how to explain it unless that was on the 9th. Let's see. Yeah. Right around the election time. And you could see a big move up after some bullish convergence. It's in a PPS weekly buy, had an HCD, and a daily buy had an HCD and a weekly buy on Friday with weekly positive divergence coming out of a squeeze on the weekly and the daily. Great volume. Coach, a little bit nervous about this considering what happened to some of the other retail plays. Hard to ignore, big sell-off, weekly buy 2 weeks ago, HCD this week. Volume about to turn up on the weekly, volume strong on the daily. In a long-term daily buy, I like Coach. Here is a REIT, C-O-R-E, Coremark Holdings. I believe it's a REIT. Pullback, high close doji, buy signal. Notice the histogram got less negative as the thing went sideways. Volume broke above on the weekly, strong on the daily, in a daily buy. Fabrinet, a new weekly buy signal, in a daily buy signal. The volume got me interested. FSP, which is Franklin Street Properties, so a REIT, pullback, weekly buy, in a daily buy, super strong volume. Juniper kind of loosey-goosey for my taste, up and down, but had a high close doji, strong volume, PPS weekly buy, PPS daily buy, strong volume. LXP, who is LXP? Oh, this is another REIT. Notice how downtrend on stock, high close doji with a buy signal. Notice the histogram getting less negative. Notice OBV breaking above. Notice a nice move on the daily with strong OBV. Lexington Realty Trust. MFA financials, pullback in a new weekly and daily uptrend with strong volume. Mosaic was one of several fertilizer stocks to hit my radar this week. I'm going to study them more. Look at the volume on OBV and the new volume indicator strong. PPS daily, PPS weekly looks great. Ocularis, this is one of my semiconductors with a new weekly buy. Strong volume. Qualcomm, it needs a signal, but here you had a daily buy come in. It's in a weekly buy. Strong volume. I'm going to be watching this. Realogy, clearly a pullback, but look at the daily volume increasing. I'd like to break above the weekly, so I'm going to be watching this closely, but a new weekly buy signal on a high close doji on Realogy, that's interesting. ROIC, whatever this is, another REIT or some type of financial. Pullback, HCD, volume strong. I like pullbacks with volume leading price. They often behave nicely. Rockwell Medical, pullback, high close doji. Volume is weak on the monthly, strong on the daily. Watch list material. Shopify, pullback, new buy signal on the weekly. Volume never broke below the moving average, strong volume on the daily. And lastly, one that interests me is Blackstone, not the BXMT, but Blackstone proper, a new weekly buy signal in a daily buy signal, strong volume. So that's kind of my analysis for the week starting 11/20. It's a tough market. We are going to get a pullback, whether it comes in February, January, or this week, I don't know. I've started to get a little bit less offensive. I put puts on a lot of my positions, some collars, raised some cash, and I'm going to wait for the next extreme because, as I said, I make money on extremes. Thank you guys. Have a great weekend. What's left of it.